Look at the first journal, which is the cash receipts and sales journal. Okay? In the cash receipts, what does the cash receipts and sales journal record? What does the cash receipts and sales journal record? It records what? Deposits. Okay, it records the deposits, doesn't it? Okay? Now, one of the ways to gather this information is to have them prepare what's called a daily cash report. And that daily cash report would look something like that right there. And there's actually a representation of this daily cash report earlier in the chapter, back on page 3.4. If you'll turn to that page, you'll be able to see this same document there. A couple things I want to tell you about daily cash reports is they really save you a lot of time, and they're very valuable to the managers and owners of the business. And every time a deposit is prepared, a daily cash report should also be created. Because when you record a deposit, you must know where the money came from. And this daily cash report can give you that. So it's very valuable, one, to you and the owner. But the other thing it does is it makes the owner feel like this is their own report if you will put the name of the company at the top of the report. Okay? They buy into it. They have ownership in it when it happens. And you are creating a system for their business. Okay? Now, the daily cash report doesn't have to look exactly like that. It can be a version of that. The shorter, the simpler, the better. And so you kind of have to fit it to the business. This is a very complete daily cash report. And if you needed it this complete, that would be great. But if you could narrow it down to even half the number of lines, that would even be better. So you try to fit it to the business. Now, in this particular case, you might notice that we have already typed in the different sales accounts. We have wholesale art sales, wholesale framing sales. We've got labor sales, right? Go ahead and write those in on your form, just so that you have it, because I'm going to have you complete this form based on one of Sonia's Z-tapes. So write in up at the non-taxable sales category, write wholesale art sales, wholesale framing sales, and labor sales. Now let me tell you that labor sales are non-taxable in a lot of states and taxable in other states. Okay? For instance, here in the state of Utah, these labor sales would be taxable today. It didn't used to be that way. But labor sales on preparing frames, creating frames would be taxable. And so if you're doing it outside of Utah, you'd need to find out what that state does. Okay? So here we have labor sales, wholesale framing sales, and wholesale art sales aren't taxable. The way we know that is we're not charging sales tax. Okay? Whereas taxable sales, retail art sales would be taxable. So that's the only one we have in there. Okay? Okay, also, Sonia on occasion will buy things using cash out of the cash register. Is that legal for Sonia to do that? Yeah, sure. Okay? As long as she notes what it is. And so we've got three categories of expenses that she oftentimes buys from. Office supplies expense, we have vehicle expense, we have meals expense. And that will vary from company to company, but those are three types of expenses that are fairly common. Can I give you one word of warning? It's best if we can train them not to take money out of the cash register. Okay? Use a separate petty cash amount. Leave the cash register money there and then deposit it all. Now, one of the reasons, and this might seem silly, but in fact the main reason why we try to train them not to do that is because if they have employees, see, a lot of employees aren't real sophisticated. And if they see the owner pulling money out of the cash register, guess what? No problem. Because they feel like, oh, he wouldn't know anyway. He's taking a whole bunch of money out. There's no way he'd know it. Okay? And that's a major issue. It happened with one of our clients that had a fish store, and he had hired all of his family to run it. And he wasn't doing any accounting on the cash register until we came in, and we set up a system like this. And every month, when we finished up, we said, you know, there was a lot of sales that weren't, you know, you didn't deposit. And he says, well, that can't be, because every time I take money out of the cash register, I always tell why it was that I took it out. So he said, well, someone's taking money out of there if you're not. And so he just pulled everybody together and said, hey, listen, this is a problem. What's happening here? And one of his nephews raised their hands and said, Uncle, I didn't think it was a problem. I saw you take money out all the time. Now, I was amazed at the honesty of the nephew, okay? And he promised he would never do it again. But had we not come in there and brought that up, who knows how much money? I mean, we were talking hundreds of dollars over a few-month period that we were looking back on, okay? So, recognize that that's one reason. The other reason why is because all too often, if they get in the habit of taking money out, they're going to pull money out of there and they're going to forget to describe what it is. And pretty soon it's going to be out of control. Okay? So try to get them to have a couple $100s in a metal box aside from the cash register and leave the cash register alone. If you can convert them to that idea, that's going to make your life and theirs a lot better and easier. Okay? Now, where are we going to gather the information to fill this form in? Do you know? What do we call that? Z-tape, okay? So here's a Z-tape for Sonia's Art and Frame for October 2nd. So let's just, taking this information, fill in that daily cash report. Up at the top, it shows wholesale art sales were $100. So to the right of where you have wholesale art sales, write $100. Then we got wholesale framing sales of $1,039. And we have labor sales of 0, particularly on this date. Now the cash register's done all the math. They're just giving a summary for the day. Under retail sales, taxable sales, we're going to show retail art sales of $462. She didn't have any invoices on that day in the cash register, so there was no record of taking any money out and using it. So if we add up, sales tax. Did you pick up sales tax? $36. So if we add up all the sales and sales tax, we don't need to subtract anything, then we have total money available for deposit was $1,637. Okay? What do we do next? We make a deposit. Take all the money out of the cash register, put back the petty cash, the cash in the drawers, put that back, make a deposit. Here's our deposit, $1,622. That's all the money that was in the cash register, except for that $150 or $200 that we keep in there. Okay? So once we've made that deposit, we're going to go back to our daily cash report, and we're going to put that deposit in down here in the actual deposit area. And then we're going to determine, do we have a short or are we over? We're short by $15. Okay? What does that mean?
Someone took the money out.
We can't explain. $15. We don't have the $15. Now, Jen, you're right. Someone might have taken the money out. That might be the reason why. It may have been Sonia. Now, if Sonia was filling this out and she saw that she was short $15, might she remember, oh yeah, I took that $15 out to buy some gas for the car or to buy some office supplies or whatever, right? She could remember that. She could go back and put that $15 down there and then show full accounting, and we wouldn't be over short or anything, okay? But now if she were waiting till the end of the month to figure all this out, what are the chances that she'd remember that she did that day? So that's the value to her. It keeps her up that day. Now the value also is, if she has an employee, can she kind of watch that and make sure that the employee is being straight with her on this? See, now we've got a client that's a bakery. They have 5 different people working the cash register at one time, and they have to do it that way. You know how a lot of stores, every clerk has their own cash register and they're accountable for the money in their cash register? Well, it would just be ridiculous to have, for them, to have 5 cash registers along the counter so that each clerk would have their own. So they have 5 people accessing the same cash register. Is that a control problem? Yes, but for practical purposes, that's the only way they can do it. Okay? So they're dealing with it. And he's happy with it. Normally, he's very happy. The employees that he has have proven themselves to be pretty reliable. Every day he is over or short $2 or $3 or $7, and he just figures that's the price of doing business, and he's fine with that. Now, he's short more than he is over. Anyone want to know why that tends to happen out in the real world? The reason why is because customers are very quick to point out that you didn't give them enough change. Unfortunately, in the real world, when you give them too much change, they're not as likely to point that out. Okay? And so when you give them too much change, that creates a shortage position. When you don't give them enough, that of course would produce an overage. But customers help us to keep honest on one side of that. Okay? So we tend to be short more than we are over. But what was happening was he was noticing $2 or $3, not too concerned. One day, all of a sudden, he's going through this report, though, and notices that he's $50 short. Now, that threw a red flag up. He said, something's wrong here. So he went around to each of the employees and said, hey, anybody know what's happening here? It's kind of like at my house. No one knows what happened, you know. Didn't know, okay? So he just figured someone put in the wrong number in the cash register, and he moved on. The next day, he's short by $60. So he asks everyone again. Nobody knows. Next day, he's off by $55 short. So now he knows he's got a problem, doesn't he? He had an idea who it was because he'd hired this one employee recently, didn't know that person very well, but he wasn't sure until the next day when the employee was off, that new employee was off. All of a sudden he's back down to just being short, $2 or $3. 2 days later, when that employee comes back, what do you think happened to his shortages? Right. Well, yeah, that's right. That's right. $70, $80. And so he was very suspicious of that employee. He watched that employee all day. Didn't catch the employee doing anything wrong, but still was short that day again. He went to the police. He said, what can I do? The police said, oh, we'd be glad to help you. For a couple $1,000s, we'll set up some monitoring equipment. We can watch it. We can watch the cash register. Well, he didn't want to pay a couple $1,000s, so he came to me. That's right. That's right. We didn't want to be shorter. So he came to me and says, what can I do? And the only thing that I could recommend, I told, first of all, do not fire that employee unless you have proof. You've got to catch them in the act. Don't say, I'm firing you because I'm sure you're the one that's doing this, even though I haven't caught him, okay? Because there's potential lawsuit there. So the only thing he could do is short her hours down to 2 hours a week. And she quit coming in, okay? And his shortages went back down. But the point I want to make is, had he not been filling out this report every single day, would he have caught that?
The end of the month,
it would have been significant, but by then it would have been too late to figure out what to do. And if I can't remember if it was at the beginning of the month or the end of the month that he caught this, but had it been at the beginning of the month, it could have been 22 days of $50 a day. That's a lot of money, right? And for who knows, she might still be working there even today, okay? So, simple report, takes just a couple minutes to fill out, max. Whoever filled it out signs it down at the bottom, dates it October 2nd in this case, and what they do is they take this information and they attach to it, they staple to this report, copy of the deposit slip, copy of the Z-tape, copies of anything applying invoices that are in there, just to staple everything to it so that everything's in one place. They drop it in a file folder where you can get to it. You've got everything you need. They've done their control on their cash, and everybody's happy. Okay? Now, let's go back to the journal, the Cash Receipts and Sales Journal, on page number 310. Find October 2nd on there, and let's relate October 2nd to this form. Once you have this form, it's a matter of just taking the numbers right off of that form and filling in this particular journal, isn't it? Okay? And so what you're going, look at October 2nd, second line down. Notice there that we've got a debit to account 736. You know what account 736 is? Overage and shortage expense. Okay? For $15, there's our short. We have a debit to the bank account for $1,622, which is the amount of the deposit, right? We have a credit to sales tax payable of $36. We have a credit to retail art sales of $462, wholesale art sales of $100, and wholesale framing sales of $1,039. Numbers taken right off of that form, transferred in here. Could a 13-year-old do this form? This journal? Yeah, if you could get them to do it, they could do that. Okay? So your goal is to get them to do it. Once they do it, they can handle. Okay? So this is just then a summary of all the daily cash reports for that particular month. We've totaled it. We've balanced it. That journal is done. Okay?